Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today it is August 8th. We are going to cover American Express. This is out of the financial sector. You're probably well aware of them. You may even have their credit card or one of their credit cards in your wallet or use some of their other financial services. Let's jump right in and find out a little more about the company. If you want to know more about them, check them out, www.americanexpress.com. That's www.americanexpress.com. So with each new development, one thing has remained constant: our commitment to our customers and our special brand of services. We began as a freight forwarding company in 1850. That's really interesting. One of the things I find whenever I do these type of videos, I learn something new about the companies that I do look at. I had no idea they started out as a freight company or a freight forwarding company here back in the 1800s. I did know they've been around for a while, but just not that long. So well over 100 years they've been around, and I'm assuming they will continue to be here for another 100 years. Earning a reputation as a company people could trust while transporting some of their most valuable possessions. In the late 19th century and early 20th century, we introduced new financial products and travel services that helped support our customers' everyday lives. In the 1950s, we introduced a charge card, offering customers a new and convenient way to pay. Ever since, we've innovated our card products, our services, and our other offerings. Today, American Express is the largest global payments network, and we continue to pride ourselves on being forward-looking and customer-focused. And that's really their bread and butter: credit cards, services for business and individuals, banking services, financial services in general, travelers checks whenever you travel. So they still do cater to the folks traveling and shipping their stuff from one place to another. And again, if you want to know more about them, check them out, www.americanexpress.com. We are talking about American Express Company, ticker AXP, out of the financial sector. They were down 0.66% on the day. Not a huge drop, but a drop nonetheless. So I thought we'd take a look at them. Closed out the day at $165.85. 52-week range as low as $130.65, as high as $182.15. So they are leaning towards that high side. Love them to pull back to this $130.65 52-week low here. Be much better value. Average volume 1.7 million, or I'm sorry, 2.9 billion. Today's was 1.7 billion. Clear sell-off, even though the chart looks like it shows them going up. There was clearly a decline here. I don't know if they started this in the pre-market or why this is showing a rise, but something going on there. Market cap of 122.142 billion. So they are a large cap company. Beta of 1.18, so they are more volatile than the overall market here. Price to earnings ratio, PE ratio, $16.84, though for this particular company, you'd really want to look at PE is not a great metric for financial companies. You want to look at price to book, even though price to book, you'd want to compare them to their competitors like MasterCard, Visa. Banks are typically around a 1 or lower, 1 being fair value. Typically over 1 price to book is above value, and anything under 1 is below value. But for these, compare them to their competitors. A little bit different for these type of companies that make a lot of their money on transactions for credit cards, credit card fees, that sort of thing. A little different than a bank, even though banking is part of their arm that they offer, one of the services that they offer. Earnings per share, very nice, $9.84 per share. Next earnings date is not listed. Forward dividend, $2.40. They are a quarterly payer. We'll see that here in a little bit. They do have a lower yield than I typically look for at 1.44%. But again, if you were to watch them, throw them on your watch list, that's what I'd do with this one. And look and maybe be patient and see if they pull back towards this 52-week low here, $130. That would probably get you closer to a 2% dividend yield if they were to do that. Ex-dividend date was July 6th, and looks like they just paid out on, or they're going to pay out here on August 10th. So a couple of days. Kudos to you folks who owned American Express on July 5th. You will get the next dividend. If you were to buy them now, you would not get this August 10th dividend. You would have to wait till the next quarter's payout. They do not have a target estimate, at least Yahoo Finance does not. We'll see what stockanalysis.com on the next page has. I'm not affiliated with either site. I just like to use these ones as sites to back check each other and make sure the information that I'm getting is accurate. Now, I like to go into statistics and look at dividend yield theory to get an idea of whether a company is undervalued or not. To do that, you'd go here and click on statistics. You go down to their 5-year average dividend yield, which is 1.32. You compare it to their current All right, 1.44, or over here, forward annual dividend yield, same number, 1.44. And if it is higher, which it is, that speaks to some undervaluation. If this number was lower, it would speak to overvaluation. So at least according to dividend yield theory, this is slightly overvalued currently. And it does have a very low payout ratio, 22.76%. So a lot of room to increase the dividend payout here, the dividend yield over time. Even though they are a low payer or low dividend yield currently, they have a lot of room to increase that dividend yield. Now, under financials, I would go in and look at the health of the company. You're going to want to look at their balance sheet. You want to look at their income statement. You're going to want to look at revenue, see if it's growing over time. You want to look at their debt, see that debt is decreasing, assets over liabilities. All that information can be found under financials. One of the things we look at here, or I like to look at, is free cash flow. We want growing free cash flow over time because we want dividends to grow over time. That's what dividends are paid out of, free cash flow. They can do some things with dividends. They can pay down debt. They can they can do some things with free cash flow. They can pay dividends. They can pay down debt. They can reinvest to the company. They can make acquisitions. All those things they can do with their free cash flow. And the most important one for us dividend growth investors is that it's growing so that the dividend continues to grow over time. 2019, $11.9 billion. Big drop in 2020 down to $4.1 billion. Jumped back up to just over $13 billion here in 2021, and a big jump up in 2022 to $19.2 billion. So overall, from 2019 to 2022, nice growth there. You'd want to watch this for 2023 to make sure that continues, but overall, very nice dividend growth, minus this 2020 year here, right here, whatever was going on. Maybe that's impact of COVID there. A lot of people staying home, not spending as much money. That may be part of it. But very nice growth overall here, nice steady growth. They are repurchasing their own stock, which as a shareholder, if you are one, is very nice because it just means whether you buy more shares or not, you hold and own more of the company as they buy back their shares. Very nice to see that. And that may have been, just looking at this real quick, that may have been part of the, although looks like they bought back $1 billion worth of shares, but pretty close to the same on 2021. So there's still some, that was probably COVID related in 2020. Now over to stockanalysis.com. Again, not affiliated, just another site. You pick what sites you want. I just recommend more than one so you can back check the information that you get is accurate. They have 16 stock analysts that have taken a look at this. They call it a consensus hold. They have a low estimate of $146. So they see a bit of a pullback towards that 52-week low, and I would love it to pull back here, 146, or like I said, closer to that 130 that we saw on the previous page. And if it pulled back to their low estimate, that would be a 12% decline from where it currently sits. If it hits their average price target of $174.25, that would be a 5.03% increase in the stock price. And if it happened to hit their high of $203, that would be a 22.36% increase. All the while, you could collect that nearly 1.5%. It's like 1.44 or 1.4% dividend yield, at least what it is currently. Now, you'll find a lot of the same information under financials, their balance sheet, their income statement, their revenue, debt to equity ratio, assets over liabilities. Look up all that information there under financials. When I like to look at statistics, there's a lot of information here. You can find out their margins, some forecasts for their earnings per share growth, their revenue growth, that sort of thing under statistics. What I like to look at under statistics is ROE, return on equity, and ROIC, return on invested capital. I like 10% or better on both, or in line with their industry average. For this one, return on equity is 29.40, so very nice there. A little light on the return on equity, mixed bag here. Return on invested capital is only 3.90. So return on equity 29.40, very nice. Return on invested capital only 3.90. That is a little low in my opinion. Now we'll take a look at the dividends. We want growing dividends over time, and they are doing just that. Very, very high dividend growth on this one, 17.89%. So even though it is a low, again, payout ratio is down in the 20s. I think we saw 22%. This is saying 24, but call it low 20s payout ratio. So very low, a lot of room to keep on growing this dividend over time with very nice dividend growth. So even though you are getting a low starting yield, though if you waited for them to pull back further, you'd get a higher starting yield, you are getting very, very high dividend growth on this one. Very nice to see. I went back to 2020. You can see it was 43 cents in 2020. Looks like they jumped it up in 2020. So they didn't raise it in 2021. So they had a bit of a pause there. Then in 2022, they jumped it up April 7th. to 52 cents, and then let's see if the up jumped it up again in April to 60 cents. So I would expect if they are going to raise their dividend, it would be again in April of 2024. So dividend growth over the last couple of years, but a bit of a pause there in 2021. So that is something to take into consideration whenever you look at this one. This is the vested interest stock screener. Go ahead and pause this and take a look at it at your leisure. This is how I set up the videos. This is also how I look at a company and a company's stock to see if I am interested on a high level. If I am interested, then I do more of a deep dive into their financials. And that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're watching, share any tips and tricks that we've learned along the way. Hey, stocks that we may be avoiding, right? As a lot of these stocks run up, they are becoming harder to find value. So let's share ones that maybe we're watching that we're seeing value, or ones that we're saying, hey, this is maybe getting a little overvalued here. Might want to hold off on buying this one, but it's all up to you. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock or company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section, and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.